In the metals quadrant, taking a look at the September copper futures, which was down 2% on the lows, but really it still remains a sideways trade. Copper's really been in about a 15-cent range since basically June 23rd. A couple of breakouts here and there, but really remained within that range on a closing basis. That's only a 3.5% range. So copper clearly looking for direction, but that down 2% today was at the lows, 2.08% to be exact. For spot 2325 was the September low. Then the high side of things, we're only up 3 basis points, so we'll just call that unchanged. For spot 3240 was that level. Now yesterday's settlement, 4 spot 3225. So basically unchanged on the day, we'll call it that. But in terms of settlement, down about 1.5% or so at the end of the day. Now FOMC minutes that came out yesterday, really along with the ECB minutes and the change in their inflation target, put a little bit of pressure on commodities in general. And the confirmed taper timeline really keeps commodities weighted, especially copper. One of the quotes we got out of the FOMC yesterday was various participants mentioned that they expected the conditions for beginning to reduce the pace of asset purchases to be met somewhat earlier than they had anticipated at the previous meeting in light of incoming data. So that might make you think that the FOMC thinks the economy is stronger, and that is true, but copper basically had already priced that in. At least that's what the market is telling us. So the taper is actually saying we're going to take away some of that punch bowl. We're going to take away some of those lower interest rates and asset purchases that were maybe driving some of the potential for copper to go higher, some of that infrastructure, both globally and at a local level. So the FOMC minutes confirming that the Fed was a little bit more hawkish in their last meeting, taking a little bit of that spark out of copper. And then growth fears are part of that as well. And the bond market is implying a global economic slowdown as we see the 10-year note trade down to 125 today. It's basically 148 in the middle of last week. And then the 30-year moving as well below 190 today. And then the flattening of the yield curve that we've seen over the last few days, especially 2s, 10s, and 2s, 30s, that's implying more of an economic slowdown and less fear of inflation. Inflation, of course, something that is driven by commodity prices being higher. So commodities are going lower, as copper seems to be doing in the short term. That's going to keep those inflation fears, keep a lid on those inflation fears, I should say, and actually drive a little bit of a narrative of maybe slower international economic growth.